Welcome everyone to our weekly Forex market analysis call, and this is in preparation for trading for the week of March 12th to 16th, 2018. Just a quick disclaimer before we get started, this is for educational purposes only. Trading is a risky business, so please be very careful with your money. All right, so as usual, we will start off by taking a look at our calendar here. So coming up this week, first thing is daylight savings time shift. So this is both for US and Canada. In spring, we go forward 1 hour. So that has happened. So this is the first day we have had the time shift. It happened last night, so which means that our London trading hours will shift a bit. So instead of starting at 3 a.m. Eastern, it will be 4 a.m. Eastern. So just keep that in mind, and that goes on for 2 weeks. It's the UK shifts back on March the 24th. So we have, about 2 weeks where the time will be misaligned a little bit. So keep that in mind. Going into Monday here, not a whole lot of important data. We do have RBA Assistant Governor Bullock speaking. That will be important. The business confidence number for Australia will be important as well. And Tuesday we have annual budget for UK there. That will be important. And also very important here are the CPI numbers. So when Fed has been talking about raising rates, so they've raised rates, and in the comments that they have had about raising rates this year, one thing that has been on the forefront is the inflation data, and everybody's questioning the inflation numbers. So if the inflation numbers are not getting higher, that will be a problem with the Fed. So right now, what we are looking for is a positive number, 0.2%. So if this number comes in, is in alignment with this number here, that will be good. However, if the number is negative, that will have a bigger impact, because the market will start thinking that the Fed's not going to raise rates, which will be negative for the US dollar. So keep that in mind. A positive or a higher inflation number will be positive for the US dollar, but if we get anything lower than this, it will be negative for the US dollar, and we could see US dollar drop against across the board. And then we have Bank of Canada Governor Bullock speaking. Again, more RBA Assistant Governor Kent speaking there. Industrial production numbers for China. So even though we don't trade Chinese currency, it has an impact on Australia and New Zealand, because they're big trade partners, and we do trade those currencies. So keep that in mind. And then we have on Wednesday, we have ECB President Draghi speaking. Last week, we had ECB rate announcement. They kept the rate the same, and we saw that euro jumped up when they changed their language in terms of the asset purchase program. So the asset purchase program is how the central bank puts liquidity in the market. So they pump money into the market by buying the bonds, and as a result, they give the money so they buy the bonds from the banks, and the banks have more money that they can then lend out to consumers and businesses, and that's how they create that flow of money in the economy. So now that the economy is doing better, the European economy is doing better, the central bank has been trying to basically get off of that program. That program is supposed to end in 2018, this year, towards the end of this year, I think September 2018. One of the comments that the central bank removed was last time they said that they're going to continue the program for as long as it's necessary, and that could be even way past the September 2018 date. This time they actually removed that wording, and what they said that the money that has already been invested in these bond purchases and asset purchases, so what happens is once the money comes due, so that when the bond matures, the money, you can get the money back. However, what they're going to do is they will continue reinvesting that money back. So they're going to end the program, so they won't be putting any more money in, but the money that's already been invested, that will be reinvested in the economy. So when they removed that program, that wording, euro jumped up, and then when Draghi started speaking in the press conference, and he clarified some of those points. We saw euro drop as a result of that. So the market will now really be looking at that key point as to what the central bank's policy is going to be going forward. There are some central bankers, some ECB members that have come out and said that we need to provide forward guidance in terms of interest rates. Draghi hasn't really said that right now. There's also a concern about the trade wars with President Trump saying that they are going to put tariffs on steel and aluminum. That is causing problems as well. So, there is some uncertainty in the market. So just keep an eye on that. And then on Wednesday, we also have core retail sales, PPI, and retail sales numbers. Again, these will be important. GDP for New Zealand will be important here as well. And the crude oil inventory will have an impact on both US dollar and Canadian dollar here. On Thursday, we have Swiss National Bank here. We have the LIBOR rate, which is the interest rate. So Swiss National Bank is still in the negative territory. And then the monetary policy statement here as well. Again, we are going through this period of change where the central banks are changing their monetary policy. So it's important to pay attention to these statements that come out. So if you're trading Swiss franc, this will be important. And then we have these Empire State Manufacturing numbers. Again, even though this is orange, it is important. And these numbers will have an impact on the US dollar here. Going into the Asian session, business manufacturing index numbers. So there's a lot of members from RBA, Reserve Bank of Australia speaking. So this could have an impact on Australian dollar here. Going into Friday, we have final CPI numbers out of Eurozone. So that will have an impact on euro there. And then we have building permits for the US and housing starts. These numbers, even though they are orange, they do have an impact on the market. So we do need to keep an eye on that. So that's it. So we really have one central bank and a couple of other central bankers speaking. So we'll just have to pay attention to that. So let's move on to our charts now. We will start off with our euro. So here we see that euro had been in this broader range for a while, and now it's in a bit of a lower range here. So we have a very nice pin bar. We had a bullish pin bar for euro last week, and from there it has moved up to the top of this range that it was, or at least the top of this pin here. Now we have a bearish pin bar for the euro. So bearish pin bar, I'm looking for price to drop here. We are likely to see price struggle at this 120,200 level, which is where price has struggled multiple times before. It did try to break through this last time, but it was not successful. So right now, based on the bearish pin bar here, I'm looking for price to drop for euro US dollar. So the bias is bearish for this week. First target would be 1.2200. Second target would be 1.2100. So looking for price to come down a bit. Pound dollar here. Pound has pushed back a little bit. So we had talked about that markets, or we had talked about seeing some pullbacks last week. So this one pulled back, but overall the bias is still to the downside. So if we take a look here, there is still that downtrend line coming down. So now we have pushed up. I'm looking for price to drop from here and potentially do a move like that. So with this one here, my bias would also be to the downside, and I'm looking for price to come back into this 1.3700 level here, and then potentially into 135.80 level below here. So looking for price to drop. Overall bias still remains to the downside, even though there is a pullback here. And so those will be the three levels. First level, 1.3700, second, 135.80, third one, 134.20 level. So overall bias remains to the downside for pound dollar here. Aussie here. Aussie was actually quite strong. The bias here last week was to the downside, but it could not break this support and resistance level here. That was pretty important support and resistance level, was not able to break it. So now we have a bullish engulfing candle for Aussie here. So I'm looking for price to push up higher. So all the commodity currencies pushed up, even though the commodities themselves didn't do as well. At least the oil didn't do as well, but the commodity currencies have pushed up. So this is a bullish engulfing candle, looking for price to move higher into 0.7960 level, back into this previous support and resistance level, and potentially even into 79, so about 0.800 level. So those will be the two targets to the upside, but looking for a bullish move in Aussie dollar. New Zealand dollar, we had a similar story here. Price could not break below this previous support and resistance level, instead pushed up higher. And now with this one, it is bullish, but we would have to be a little careful here. So this one, it engulfs the previous one. So as a result of that, I would be looking for a bullish move, and the target would be 0.7438 level. So 7438 level to the upside, back into this previous support and resistance level here. But if the price is not able to break past this support and resistance, which is at 0.7320, we could still get that move to the downside. So that's the only thing I would be mindful of overall, just based on the weekly technicals here. It looks like an up move, but we could get stuck here, just like we got stuck to the downside. We could get stuck here, and this can happen. So just be mindful of that. But overall bias will be to the upside. Sorry. Dollar CAD here. Dollar CAD looks bearish. Sorry, which fourth bullish candle are we talking about? Can you please clarify that? Yeah, so I'm looking at Aussie US dollar here. Which bullish candle? Okay, we'll come back to that. New Zealand dollar. Okay, so New Zealand dollar, this is where we are. So we are in this range, essentially, in the New Zealand dollar. So we have basically traded in this range because we're in the bottom of the range. So I'm looking for price to go up higher. So this is kind of how I'm viewing it. So looking for price to go into the top of the range and then react. But I have this in the middle here. So if the price is not able to break above this, see, this is the support and resistance I'm looking at. Price had a lot of trouble with this area. So as the price is going higher, if it's not able to break above this, which is about 73.35 level, the price could do one of these. So that's what I am looking at for New Zealand dollars. So the bias is to the upside, but there is a concern about getting stuck at this support and resistance level. Dollar CAD here. Dollar CAD is a nice bearish pin bar here. And this looks quite nice on the weekly. So as a result, I would look for price to drop. And now with this one, the target would be 1.2620 level. The concern again would be right over here, because this is an important support and resistance area coming all the way from there. So this is a 1.2800 level. If it doesn't hold below 2800 level, it could still go up. But I do like the weekly pin bar. So my bias on this is to the downside, and the target is 1.2620 level, which is this support and resistance area, which is the bottom of our previous weekly candle close here. So the bias for dollar CAD is to the downside. Euro pound here. Euro pound has been trading in this range for quite some time. We are at the top of the range here. So I'm looking for price to drop back towards the bottom of the range. So the bias is to the downside, and the bottom of the range here is 86.93, so about 8,700 level. So looking for price to drop for Euro pound. Euro Swiss franc here. Euro Swiss franc has had a big bullish move to the upside. So I'm looking for price to go up further from here. And because we have had such a bullish move, we could see this type of a pullback back into 1.1640 level, and then price goes and continues on to the upside. So my bias is bullish for Euro Swiss franc and looking to target the top here into 1.1800 level. So the bias is to the upside. Pound Swiss franc here biases to the upside as well. So the first target would be 1.3230 area and then 1.3480 area to the upside. So bullish bias, nice bullish engulfing candle. So looking for price to move up higher. Now do keep in mind there is a Swiss National Bank monetary policy assessment coming out this week, which could have a big impact on the Swiss franc if they change their commentary around the interest rates. So keep that in mind, but from technical perspective, this looks bullish. Dollar Swiss franc, big move to the upside here. We have broken through this previous pin bar here, and now looking for a bullish move to the upside. The target here would be 9630 level, 0.9630 level. Again, with Swiss National Bank, things could change, so be mindful of that. With this one, I would look for a bit of a pullback here as well, just because we have had a big, huge candle close here. So I'm still looking for a move to the upside, but there could be a pullback back into this support and resistance at 94.20 area. Okay, yen crosses. Yen crosses have had an interesting week. So the biggest thing that happened with the yen crosses was that we saw some political events take place. So North Korea essentially is ready to talk, and they are ready to denuclearize. When we hear comments like that, it is generally bad for yen, but positive for yen crosses. So yen weakens and everything else will strengthen around that. So yen is a safe haven currency. Swiss franc is a safe haven currency. US dollar is a safe haven currency. When things are going on in the market that are perceived to be negative, these three currencies strengthen, and we see everything drop against these currencies. However, when we see positive things going on around the world, so things like North Korea not wanting to keep the same stance that it has held for this long on their nuclear weapons program, that is considered positive. When such positive geopolitical things happen, market sees that as a risk on environment, or it creates a risk on environment in the market. That means investors are willing to take more risk. And when investors are willing to take more risk, they will invest in things like stocks. And we'll see stock market go up. And when we see the risk off environment, then the safe haven currencies will actually strengthen. So when there is a risk in the market, when investors don't like risk, they're risk averse. So when we see negative geopolitical events like North Korea threatening to basically bomb US, that's a negative environment. So as a result, investors get risk averse, and they will pull money out of the stock markets, and they will put money in Japanese yen, Swiss franc, and US dollars, which are considered to be safe haven currencies. So basically we saw a risk on environment. That means Japanese yen sold off. And as a result, we saw Swiss franc, all the Swiss pairs go up as well. And we saw yen crosses go up as well. Now, there are talks about President Trump meeting with North Korea. Now, if that comes to play, then Japanese yen will weaken further, because that's a positive thing, and we don't need to be in safe haven environment if that happens. So in that case, yen could go up. But based on this technicals here, we are still in that overall downtrend here, but we have had a bullish candle close. So now this has to be played as an overall picture. So we have to look at the overall picture. We'll have to keep an eye on what's going on in the market. So keeping an eye on Bloomberg and Reuters to make sure that we understand whether North Korea and US will talk or not will play an important role here. So from overall perspective, this is bullish, and looking at the technicals, this could push up a bit more. So we could go all the way into 150.80 level here, all the way back into the previous support and resistance level. So I would for now call this bullish, but again, keep an eye on the commentary that comes out. Just overall, if they talk, that's a good thing. If there's a positive outcome of that, that would be, again, positive for the yen crosses. If there is a negative, if let's say the talks break down or they can't even set a meeting date, that will be considered negative, and then yen crosses could drop. In terms of the monetary policy, we did have Bank of Japan come out with their monetary policy. They didn't really change anything, so that was pretty neutral. But it's really the geopolitical stuff that is playing into the yen at this point. So my target for my bias for pound yen here will be to the upside, and the target will be 150.80 level. So bias to the upside here. Euro yen, similar story here as well. All the yen crosses went up, so we pushed off of this support and resistance level. Overall, we have a bullish candle close, and I'm looking for price to move higher into 133.60. Now, just keep in mind, all the yen crosses will tend to move together. So keep an eye on the market commentary. Overall, biases to the upside for euro yen as well. Dollar yen here, same story, price has pushed up. We are into resistance here though, so keep that in mind. Overall bias still remains to the downside. With this one, I would look for a bullish move to the upside. But again, from technical perspective, we could get stuck at this 107.20 level. If price does not break above 107.20 level, then we could go back towards the bottom of this level, back into 105.30. But if all the other yen crosses move up, dollar yen is likely to move up as well. And the target would be 108.80 level to the upside. So bias for this week will be to the upside for dollar yen. Aussie yen, big bullish candle close here. Price bounced off of the bottom here. So this was a very important technical level. So as we can see, price bounced off. As a result, looking for price to move up higher into 85.60 level to the upside, back into the spin, into the support and resistance level. So Aussie yen bias is to the upside. Same thing with CAD yen as well. Previously, the bias was very much to the downside in this, but now that all the yen crosses are moving higher, this has also pushed up. So the target would be 85.50 for CAD yen. So let's take a look at gold. Gold, we have a doji. So this is this shows rejection of the top, but also rejection of the bottom, and the price opened and closed at exactly the same place that it started off from. But this rejection of the high here shows that price could come back lower, because right now we are into the middle here. The target for this one, so the bias would be to the downside, and the target would be 1302.71 back into this pin here. So with this one, because it's a doji, there is indecision in there as well. So just keep that in mind. Let's take a look at oil real quick. So it looks like oil did go up on Friday here. It had dropped previously. Now it went up. With this one, that is looking quite bullish. Let's take a look at the weekly. Okay, from the weekly perspective, that is neutral. From a daily perspective, that was quite bullish. With this one, again, very, very neutral. We are in this range. So since we are in the middle of the range and rejected the bottom of the range, oil could go higher into 64.60 level, back into the top here. But overall, the bias is for this week, the candle close was very neutral, which means it could go both ways, but it is in this range for the last 3 weeks. So I'll treat this as a range bound, and I'm looking for price to go into the high of the range and then come back into the range again. All right, so that's all I have. Any questions or anything to add there? Okay, it looks like there are no questions, so we will call it a wrap. You guys have a wonderful wonderful weekend, or the rest of the weekend, and I will see you next time then. The non-farm payroll, quickly, non-farm payroll, basically there are three different things that we have to pay attention when it comes to non-farm payroll. One is the jobs number, and then there are the wages, and then also looking at what kind of jobs actually, what kind of jobs were added, full-time, part-time, that type of thing. So the jobs number came in positive. However, the average earnings number came in negative, and that's why we saw the US dollar drop. It's average earnings numbers are actually very important because they say, or they show how the economy is doing. If the jobs are increasing but the average earnings are not increasing, it's not considered a good thing, and that's why US dollar dropped as a result of non-farm payroll number. All right, you guys have a wonderful weekend, and I will see you next time. Bye for now.